At BMO Insurance, we're not just offering policies. We're delivering trust, innovation, and momentum. With tools like Smart App, Rover AI, and soon SegFund e-application, we're streamlining insurance for advisors and clients alike. Our people make the difference. A national team of experts dedicated to understanding your needs and your market. Here, customer experience isn't a touch point. It's the whole point. We're committed to our communities, supporting local sports teams and grassroots initiatives across the country. Because at the end of the day, insurance doesn't evolve on its own. It takes people, purpose, and the will to do better. Smarter, faster, more human. Welcome to BMO Insurance.
Hi, everyone. Welcome to LifeFWD. Today's webinar, I'll be joined by my colleagues Pierre Ghorbanian, VP of Advanced Markets, and Daniel Balofsky, Manager of Life Insurance and Annuity Taxation. Our topic today is generational wealth transfer. For the next few decades, many experts are calling the Great Wealth Transfer. There's billions of dollars being transferred to the next generation, and we're going to talk about that today. Not just the numbers, but so many different aspects of that. How it impacts our lives, the strategies we use, and everything else we implement with regards to how we make our clients' situation better for them. So grab a coffee, let's sit down, and let's have a conversation about wealth transfer. Welcome, Pierre and Daniel, to LifeFWD. Thank you so much for joining us today. I'd like to start off with just a brief introduction by both of you and give a little bit about yourself. So Pierre, we'll start with you.
Thanks for having me. So my name is Pierre Ghorbanian. So I lead the Advanced Markets Unit at BMO Insurance. I've been with BMO for about 14 years now, 25 in total industry experience. So within the Advanced Markets Unit at BMO Insurance, our role primarily is to help our wholesaling team across the country on large case development. So whether there's a technical tax inquiry or whether it's just a simple product question of how we better optimally structure the product, that's where our team comes in to help our wholesaling team across Canada.
I've worked with Pierre for 15 years almost now, and there's no one with more passion for our industry than Pierre. So it's great that you could join us today. Thank you so much. And Daniel, could you share a bit about yourself?
Sure thing. My name is Daniel Balofsky, and I'm a manager of life insurance and annuities taxation at BMO Insurance. I have over 2 decades of accounting experience and a full decade of insurance experience with things like life policies, segregated funds, and annuities. Part of our ongoing duties are making sure product design is tax compliant, ongoing reporting, and providing advanced planning and solutions, opportunities and solutions towards clients.
Awesome. Thank you so much for joining us today, Daniel. Pierre, the first question I'm going to start with yourself is, let's start the big picture. Why is generational wealth transfer such a hot topic item today?
So there's, depending on what stats you're looking at, there's about $1 to $2 trillion of assets that are expected to transfer from one generation to another over the next 10 to 15 years or so. So that represents a massive amount of money. And what we need to be able to do is sort of be able to help guide the next generation with that transfer process. And life insurance happens to be the most tax efficient way of being able to fund that strategy going forward.
We've heard about it for a long time now. The baby boom generation's getting older and older, and this is where that wealth is getting closer and closer. Decisions are having to be made. So it's so topical in that sense. And I love how you worded it there. 1 to 2 trillion, such a large amount of money. It's unbelievable when you think about it. Daniel, for yourself, what are some of the biggest risks with regards to estate erosion that families face?
Definitely. Two things happen immediately when someone passes. One, they're no longer there to provide guidance and instruction. And the second thing is that the government deems them to have disposed of significant assets, whether or not they've actually liquidated them. What insurance products do, from life policies to segregated funds and annuities, is provide liquidity that's measurable and quickly delivered. It also provides continuity towards the estate and any corporate entity that has the insurance. And the third big item is equalization. People are able to plan ahead and ensure that dissimilar assets are passed along in a fair way according to their desires towards the next generation.
I love the way you phrase that, those 3 points there. The equalization is so important. Not every family situation is similar, and everyone's assets can be divvied up in so many different ways. We hear it often with the farmers, giving the farm to one family member but not the other, whereas insurance plays that equalization role, which is so important. But also that liquidity, how fast it gets there. When the estate is settled up and there is potential tax bills due, how quick the insurance pays out is so important. So, some very valuable points you mentioned there. So let's talk about some of those strategies. Pierre, for yourself, how does permanent life insurance work with helping preserve estate value?
The best thing about permanent life insurance, or life insurance as a whole, is that tax-free death benefit. That's the biggest part, because you think about it, I put $1 of capital in to fund a life insurance policy. That immediate liquidity to the estate is, the efficiency of that is far more efficient than just, say, using a traditional conventional investment portfolio that's being hit by taxation and trying to net that same number. So life insurance is really important to help fund the liquidity that you need to fund whatever liabilities you have down the road.
And that tax-free benefit, that's coded into the Income Tax Act, is it not?
I mean, I think that's the best part about it. This isn't some weird offshore strategy where you got to get a trust set up in some Caribbean island, right? This is really plain, boring planning that's all within the Income Tax Act, but it works so well. So the great thing is that you don't really need to get really fancy with these solutions.
Daniel, can you walk us through the capital dividend account? Often referred to in our industry as the CDA account, and how that works in transferring wealth to their heirs.
Definitely. The capital dividend account presents a really powerful planning opportunity towards any Canadian private corporation. What happens when a Canadian private corporation receives the death benefit from a life insurance policy is that they gain an increased ability to pay tax-free capital dividends towards Canadian residents. One of the things that we like to plan for and ensure that people take into account is that this powerful tax planning opportunity is not squandered. If the death benefit lands inside a trust or inside an individual's hands, there's no uptick inside the capital dividend account. They don't have that, but a private Canadian corporation does, and that's just one of the insights we like to provide to clients and advisors.
Right. It's the number of policies that come in corporately. There's so many assets trapped in corporate surplus, sitting in their corporate accounts. The CDA is such a vital role and plays such an important role. And part of that is just sharing that information. I find half the time, it's common knowledge for us in the insurance industry to know that, but it's not necessarily common outside of our industry. Not every accountant is aware of the CDA. So it's so important for us to share that information.
I think that's a great point you just sort of brought up there. The fact that if you're not really in that planning part of tax planning, like from an accounting perspective, you may not be really fully aware. And we've come to numerous situations where an accountant wasn't even aware and they were challenging the advisor. So, what we actually did at BMO Insurance, we actually developed a CDA guide where we go through how the CDA actually works, go through numerical examples, provide the sections within the Income Tax Act. So if there was that kind of a barrier to that conversation, the advisor can easily pivot to that guide and help move that conversation along.
Yeah, no, it's a great guide and very useful for many advisors. So Pierre, I'll ask you another question. What are some of the common misconceptions about life insurance and estate planning for high net worth families that you're often seeing, out and about, talking to advisors? What are those misconceptions?
I think like the biggest thing is for wealthy Canadians, they think they don't really need insurance, and they're technically correct because they don't. Whether their final estate ends up being worth 50 million versus 40 million, no one within that family is going to go hungry, right? But ultimately, what we're trying to show the value at is that life insurance proceed provides the continuity and the liquidity that the family will need to ensure everything kind of continues along, right? Funding any kind of short-term cash flow that the enterprise might need, and just sort of ensuring that continuity is there.
I remember many years ago when I was an advisor, often we would say it's a need versus a want. And once the high net worth family understands the value of the CDA we talked about, of the Income Tax Act and the impact it can have, it becomes a want. And they start to understand, well, that's something we want. It's not something we need, but it's something we want. But once again, communication, identifying, so important.
Yeah, I mean, you gotta shift that mindset and think it's not a cost, because it's still on your balance sheet somewhere. And I think Daniel probably could better explain that, but I'm not an accountant here. But it's still there. It's a notation. It's a cash value on an entry. It's not lost money, and I think they need to understand that, especially the next generation, as they sort of continue on with that family's wealth.
Now, if we pivot, on that same similar topic, but if we pivot to, family dynamics, what role does life insurance play in aligning financial planning and family governance and values?
I think so. What life insurance really does is it's sort of helpful in funding, say, the buy-sell agreement. So, making sure that's all fully incorporated into a shareholders agreement, I think, is probably the big thing, and having that continuity that's going to be there. And then beyond that, I think it's also very helpful in that it should form part of the overall governance, the constitution of the family. So they have the rules all set up. What's going to happen when dad goes? Who the next person comes and takes over the company, as an example, and where they're going to get that liquidity they need to fill the gap. Say if there was a revenue shortage, or if they need to go out to replace a talent that maybe is no longer there at the company anymore, that life insurance ensures the business can continue.
I think something you touched upon there, it's all about communication. It's all about the communication, the family talking amongst themselves about the opportunity, what they need to do, and everyone understanding. I in a past life, being an advisor, I ran across so many scenarios where the next generation, who were the beneficiaries, weren't aware of what the plan was. So often, and they start to question, we talked about earlier, the cost. They look at it from just a cost perspective, not a benefit perspective, not a saving tax perspective. So communication plays such a key role. You talked about, you mentioned some things in your answer there, and I have a question for Daniel. With regards to, families and their legal documents, such as wills, trusts, shareholder agreements, how do you harmonize that with life insurance?
One of the key considerations is that life insurance advisors are a member of a planning team. And while there's no I in team, there's definitely an I in insurance advisor. What we bring to the table and what the insurance forces people to do is confront that end-of-life planning and that generational transition. And typically, it will be the insurance and advisor and financial planner who has access to the most up-to-date organizational charts, the location of the will, perhaps a letter of direction, and they've had the discussion, who should be the beneficiary of what distribution? And with those things confronted and acknowledged, that's when you can get into meaningful planning.
Yeah, once again, similar to the last, conversation or question, communication, understanding what every piece of the puzzle is doing is so important. It's hard to do planning when you don't know what the will says, or it's hard to, do, a trust without knowing, a shareholder agreement. It all has to work together. Do you find, Daniel, from your experience, this team approach, It's easier said than done, I find sometimes. But what are some key things you can talk about or recommend how to pull that team together? Just from a holistic standpoint, how do they build that team?
I think one of the important things we know in the industry is the COI, the center of influence. And that means while there may be a number of advisors around the planning table, each one brings something to that discussion. You've got typically a lawyer, you've got an executor in waiting, you've got an accountant, and you've got a financial planner or insurance advisor. Each one has unique insights into the client's scenario and understands that the client's situation and needs changes as the client's life progresses. And so with that knowledge, someone will bring in the tax knowledge and the legal ideas. And when everybody contributes to that conversation, you've just got that much more meaningful planning and solutions for intergenerational transfer and just planning for the future.
Yeah, I love that. It's so important to bring that team together, but also bring the team together on a regular basis. I always would say life changes dramatically every 5 to 10 years. When you're in your 30s, you're suddenly getting married, you're having kids, life changes. Then when the kids get a little older, life changes once again. Your family dynamics change. And so pulling that team together on a consistent basis or pulling new people in is important because, not everyone's going to work till they're 105, argument's sake. But it's so important to pull that. And thank you very much for that. That is fantastic.
Interesting. Like I was reminded of, I was at a presentation, the speaker was talking about this, but doing the family stress test. So having, the patriarch or the matriarch of the family at the head of the table, and then having all the stakeholders, the kids and one all around. And basically the instruction here is, so mom, dad, you've now passed away. You can't talk anymore. All you have to do now is listen and basically have the kids sort of work with each other, figure out, okay, what are the next steps? And that's when you kind of realize, oh, wait a minute, I haven't done that part of the planning part really that well. There's a hole in my strategy where you think in your head, you've worked it all out, but then you start realizing, oh, maybe the two of the siblings are fighting with each other over who's going to take over. Another one is saying, well,
so many family dynamics.
Yeah, it's
so many family dynamics that can play a part of it, but bringing them all together with the team so everyone hears it. It's all common knowledge. There's nothing lost in translation. So important for those high net worth families. Pierre, the next question is for you. What are some of the strategies to prepare the heirs for managing inherited wealth?
Well, communication is like really, really important. But I think that, shifting their mindset to understand we're not just transferring assets, right? They need to be the steward of that wealth, and they need to be able to preserve and protect everything that was done up to that point, so that they can, when they eventually are at that life stage, they can kind of pass the baton on to the next gen. So making them fully understand what the strategy is, why it was done. Frequently, a beneficiary of the deceased or even of the disabled person that may not be able to communicate doesn't actually know what the policy was all about, or even what the function was. And I've seen many experiences. I've personally developed or seen it in my own experience as well, where the beneficiaries didn't even know why this policy was done in the first place. So for an advisor, I think it's important to be able to have these regular communication points with not just your client, but also, G2, G3, so they understand why they're doing this, and just having that frequent reminder is really important.
Yeah, knowledge is key. Everyone, all the people involved have to understand. We've talked about this so much, whether it's communication or all the players being at the table at the same time. It's so important for the transaction and the solution to go through smoothly. It's so important. But then also from a policy service perspective, continuous that and have that, regular updates for all those families. So, we've talked about the opportunity, we've talked about, the reason why it works, but why don't we shift gears a bit? And Pierre, what are some of the innovative life solutions that are emerging to meet some of these families' needs?
So I would say the top three that we kind of focus on right now, first and foremost, in the ultra high net worth category, I would say the immediate financing arrangement is arguably the probably the most common strategy that's spoken and promoted. And ultimately what that fundamentally is, it's a financing tool. The client has a life insurance need, and they need to fund it, but they don't necessarily want to have that capital tied up into an insurance policy. So what the IFA simply does is just replaces the capital that was used to fund the life insurance policy. And so this way we can basically get all the benefits of the insurance solution and the tax benefits, the CDA play that Daniel was talking about earlier, but also not having that same drag to their capital, so they can easily deploy that capital somewhere else. I think that's probably first and foremost the most at the high net worth.
And what's number two?
Number two, I would say within that middle to affluent, or almost to the affluent market, was probably going to be the insured retirement plan, and that just fundamentally is just a high cash value life insurance policy, and fundamentally what you're just basically doing is leveraging it on the back end.
Right.
So that just supplements retirement income, because the reality is for high net worth Canadians, there's only so much you can get out of an RRSP or TFSA, so that the leverage, the rear end, the back end leverage strategies like an IRP are just there to sort of fund that shortfall.
Right.
And within the third market, I would say, and that's sort of the mass market, I would say, is something as simple as the estate preserver plan concept. And all that is it's a financial planning software that we have at BMO Insurance, where the advisor can enter the client's current assets, the ACB, and it calculates the current tax liability, the projected tax liability, and how life insurance becomes a cheaper funding vehicle in comparison to, say, creating a sinking fund or surrendering assets at time of death, triggering taxation to fund that liability.
I think the EPP, the estate preserver plan, is so important, and it can be such a valuable tool for so many advisors. You know, planning software can be expensive for a lot of advisors, but having the access to a tool that can identify the opportunity, can identify the need, the liability, and using that tool to show your clients that insurance can play an important and be more cost effective, as you say, it's so important.
Absolutely.
So it's really a great solution.
For sure. I mean, from a problem, like at the end of any kind of purchase that we make as consumers, if we don't recognize that there's a problem, we're not going to act on it, right? So I think what the EPP really does is it creates that problem. Oh wait, I do have a tax liability, and there's different ways I'm going to fund it. And then the EPP basically kind of shows you this generally tends to be a cheaper way of funding that liability.
And specifically to that point, I mean, this is why we like to refer to life insurance as a financial asset and not an investment product. Life insurance is incredibly versatile, and it gives you these abilities to provide a tax-efficient kind of generational transfer, but also to confront issues like who are we going to have as a beneficiary in our designation, and how are we going to plan for the future.
Right. Staying with you, Daniel, with regards to your background, taxation, what are some of the recent legislative or regulatory changes that impacts life insurance strategies?
So there's always changes, and to understand them, we're typically monitoring the Department of Finance releases. Sometimes they come through the budget, sometimes otherwise through other legislation.
So they can come throughout the year at any time?
Definitely. And there can be budget-based legislation, there can be draft technical amendments that come through. Another place we look is with regard to the Canada Revenue Agency. They're always interacting with the industry groups with whom BMO Insurance is a big represented part of. And the other part of it is to realize there's always ongoing litigation inside the court cases. So we'll be watching not just the tax court, but also provincial courts for issues such as probate.
Yeah. So is there anything that's come out recently that you want to share that has an impact to a lot of our advisors?
Definitely. There's two issues that come to mind right off the bat. One is this idea that, circa 2017, 2018, the government really was taking a look at saying you shouldn't have passive assets inside a private corporation. And to sort of dissuade people from holding corporate-owned investment portfolios, they said they would grind down a corporation's ability to access advantageous tax rates for their business operations. So what we really took a look at this situation and saw was that where you have an exempt life insurance policy, the growth inside that policy doesn't block your access to those advantageous business tax rates. And that was a matter of matching the product to the opportunity to provide a solution. Now, I said there was a second item that came up, and that has to do with the post-mortem planning. Recently, the government took a look and said sometimes people need more time to plan and execute their post-mortem transitions. And so they were taking a look at extending the time period in which to do that through something we call the loss carryback strategy from 1 year to 3 years. So things like this are something that we always keep our eye on, and it's our attention to this that helps the clients and advisors to whom we provide service.
I feel like every time there's a release or the annual budget, I think a lot of internal conversations we have being in business development is we just have a new opportunity. There's always the opportunity, and it seems like, some are bigger than others, don't get me wrong, but there's always an opportunity to, share with our advisors, here's now what you need to look for. And, whether it's the budget, tax adjustments, whatever, the bulletin, so on and so forth, they're always an opportunity, it feels like, which is a great thing for advisors.
I think it's really great, the fact that it's like, this is like a legitimate product that we can use to address some of the things that Daniel spoke about, right? The passive income rules, post-mortem planning. We can structure policies to help reduce the impact of post-mortem planning. And so whether you, however you structure your affairs post-mortem, I think the clients need to fully understand that life insurance is only going to make it better. It will never make it worse. If you did incorporate a life insurance policy, it's only going to make it better. So that's why it's really important for clients to engage their financial advisors and their tax professionals to ensure you have a proper policy structured in the most efficient way to address that.
Definitely. Right. And if we take a look at Pierre's point, we have a situation where a post-mortem planning strategy is called the post-mortem pipeline. But according to the Canada Revenue Agency, for that strategy to play out, it takes somewhere in between 1 and 3 years. Well, we've mentioned that life insurance, a key facet of that financial asset, is the liquidity. If you need cash now and you need a measurable amount, that death benefit coming through in a measurable way and in a fast fashion, that will give you the financing and the liquidity to ensure continuity while you execute the remainder of the plans. So life insurance is not aside from your planning, it's to complement it in the very best way possible.
Yeah, no, that's so important. I think that's great knowledge, and I think everyone should be as best they can be on top of these changes because it creates opportunity and it creates awareness to share with our clients. So important. On that note, what are some of the things we can share from a real world example where life insurance made a significant difference in a family's wealth transfer plan?
So I think there's a lot of applications, but something really simple and basic as an estate freeze, I think is a really powerful strategy where you can incorporate life insurance into that, right? Because you lock in your tax liability at whatever the final number happens to be, and then you still have to address that tax bill down the road. And so life insurance becomes a very cost-effective way of doing it because you're funding it within the corporation. You're then able to maximize the CDA that's created by the life insurance policy to fund that liability. And I think that's kind of like one of the basic strategies that we can use within Canadian corporations.
Definitely. I think one of the things that's near and dear to me is this idea of planning for the next generation where somebody has physical or cognitive impairment. And that's really where this idea of equalization comes into play. You're going to have to figure out how you're going to allocate to beneficiaries. And whether it be a life insurance policy, a seg fund, or an annuity, understanding the rules, if something's held in an open account or in a registered account, when we provide that understanding and when we prompt the questions to say, have you considered this, that ensures some of the most meaningful kind of transactions in which we've had, where we've been able to provide for somebody with a physical or cognitive impairment in Gen 2, and we've really been able to give peace of mind to both Gen 2 and Gen 1.
Yeah, I love that. I mean, the equalization is huge, right? You have one child that's going to take over the business, the other child will not be able to do that. But mom and dad want to play keep an even hand to make sure the other child has just as a comfortable life and meaningful life as the other child.
So with all this information that we've shared today, what is some of the advice, and I'll ask this to both of you, what's some of the advice we can give to advisors who are just starting out to incorporate, life insurance into their estate planning questions? So Pierre, I'll start with you. What's some of that advice?
I think the where you should probably begin is sort of ask the client what's important to them, like what drives them, because sometimes we might place emphasis on something that we think is really important, but it actually may not be that important to the actual client. So being able to get a gauge of, like, how from a scale of 1 to 10, is that important to you? And that can sort of help guide the direction as to where you want to start, because there's a million things you can do with the client, and what your priority might be may not be what the client's priority is, right? So it's sort of being able to understand and speak to the value of that, why the product works, how it works, and the trust that you should be feel comfortable with from the advice from the advisor and from the institution as well. That's going to be making that ultimate payout.
And Daniel, I'll pass it to you.
Definitely.
Advice.
So I like to refer to it as the life of the life insurance. And really, not just the life insured's life goes on through different developments and changes, but also the life insurance coverage changes over the course of the person's life. They might start a business, they might plan an expansion, they might want to sort of tone down their business activities towards their later years. And throughout that, you've got life insurance that can provide access to finance. We know about policy loans and collateral assignments. We also know that there may be points where a life rider may give them a payment vacation on their premiums, and they might be able to access some of the life policy while they're still alive in the case of a disability. And of course, there is the death benefit at the end of life. And then just realize there's always short-term, mid-term, and long-term planning, and that continues to Gen 2. So Gen 1 might have put in place a corporate-owned life insurance policy. Well, if Gen 2 is inheriting that corporation through the shares, then maybe they should look at, say, should we also have corporate-owned life insurance when we conduct business operations?
Yeah, so many important points there when starting out. So, one of the things that I always think about is to Pierre, your point, asking the right questions, learning about your client. Those discovery meetings are so important. You don't want to put your own bias in front of the clients. You want to listen to what's important to them. And, I think 99% of the time, they'll identify what the need is, what the want is, and it's a matter of just putting the proper solution in place. As we close out here, I'd like to hear some final remarks. And, from a wealth planning perspective, wealth transfer perspective, what are some of your final comments, Daniel?
One thing to realize is that no one's in this on their own. There's a group of people who are always interested in the insured's best interest, and that includes their tax practitioners, their legal advisors, their executors, and their insurance.
And of course, your insurance company.
Indeed. And a lot of the questions we get have to do with providing a solution. So I always say we're not pushing a product. We're providing an insurance solution that's uniquely dovetailed, and it meets the pain points and the aspirations that clients have when they want to take a look at future planning and intergenerational transition.
Yeah. And Pierre, your final remarks?
So this may kind of sound a little bit cheesy, but the way I kind of look at it as insurance professionals is you're a bit of a hero, right? You go in, you build this plan, you build this solution, the ultimate event happens, and then you're there to provide that final payment out to the survivors. The stress you relieve in that family, you can't quantify that. You can't put an internal rate of return metric on that. And so you can't lose sight on the incredible, valuable service that all insurance professionals provide to Canadians across the country. And so they just need to continue what they're doing and talk to as many people, because you do make a tremendous impact to the recipients of that final payout.
On that note, I want to thank you both for joining us today. The great wealth transfer is coming. It's here. We know those trillions of dollars are transferring to the next generation. It's a conversation that more people have to have. Communication between the family members is so important. And what I'll say, understanding what resources we have here at BMO Insurance is so important. We've got our taxation person, we've got our advanced markets, we have our business development team. So on that note, thank you very much for joining LifeFWD today. We're looking forward to working with you. Our business development managers are available for conversations. Thank you once again, and we look forward to seeing you on the next LifeFWD.